June 16th, 2025. Today was a difficult day for the three bar micro channel. Yesterday, there weren't, I believe yesterday 60% winners, and today it was 50% winners when it averages 75%. Now, I've been working around 82% for a lot of the month, so there is going to be some sort of mean reversion with that. But if you did, if you didn't take a large loss today, then you did a pretty good job, at least in my opinion. I ended up the day with a small loss, but this is the kind of day where when you first start trading, just the basic scaling in, looking for the symmetrical second leg, you usually get destroyed on these kinds of days, which is fine. That's part of the process, and that's a big piece of the learning process. But a day like this, I used to give back, my whole month, whatever I had made the month, and then some. And today I gave back maybe half of what I made on Friday. So I had a pretty, I did take a loss today, but it was not a big loss, and I'm pretty okay with that. But anyways, bar one, a big bull bar closing on its high. 20, maybe 30% chance it's the high or the low of the day. Odds are it should get a second leg. You get a pullback 2 and 3, and then 4, 5, 6, 7, another leg up. Generally, when you get something that's so steep, the market tends to go sideways for a lot of the rest of the day. We're probably going to touch we did touch the bar 3 high. I was going to say we were probably going to get back to the bar 3 high at some point. Bar 8, a bear bar, but better buy the close bar than to sell the close bar. After 4 straight bull bars, the first reversal down is probably going to fail. So it's better to buy the close of the bar. And if 9 looks like 8, which it will, pretty low percentage of the time, you can just get out. 9, a bull bar, 9, 10, 11, 3 straight bull bars, so a 3 bar micro channel. I did not take 6 because I don't trade before bar 7. I did, however, buy the close of 11, and I bought more during 14. I knew it was a late leg, so I was pretty much ready to get out if there was a bear bar closing near its low that was, the size of half the range, or, a bear bar that got follow through that was strong, but 17 wasn't very strong. So I ended up sitting through all 3 legs down, and I used the bounce on 22 to get out around break even. I took a very small loss on this trade because I got out a couple picks below break even, but it was essentially break even. 23, it's a 3 bar micro channel, but you're trading against a tight channel down. This was consecutive breakout bars on the 15-minute chart, so I did not take this one. And then we got a big bear bar on 24. Came within 1 tick of the 150% stop loss. And then you would have been stopped out on 26. 28 was an interesting one. It doesn't look very good because of all the tails and stuff, but I thought it was probably leg 1, and I was struggling to take off points for being against the regime. So instead of buying the close as this bar was falling, I just bought, and then I just exited on the close of the bar. So again, I took a very small loss with this. I didn't love that trade, but within my rule set, I was supposed to take that trade, but I just did not think it was very good. So I ended up taking, again, a very tiny loss on this trade. 32, 33, 34. I did not take the close on this one. I didn't think it was all that great. We were bouncing from the moving average, so I thought it was okay to buy. I instead bought the pullback, but 35 and 36 is too strong, so I used 37 and got out at break even. So, this is kind of what I'm talking about. All 4 of these trades ended up being losers, and I took 3 of them, but I ended up losing, basically 15% of what I would have lost had I taken all of them the way that I, mentioned. Which again, it's okay to just buy the close, scale in at the, 25, 50, 75, 100% pullbacks and look for the symmetrical second leg. It's a mildly profitable strat. It's not super profitable. You won't end up red if you do it correctly every time, but it's hard to do it correctly every time. It's a very marginally profitable strategy. So you have to evolve it as you get used to it, but that's a good way to start. As I mentioned, so I did take those buys. I did not sell 37 as I had just gotten out of a trade. And then 38, 39, 5 bar micro channel. I thought this was a good one as well. 46, 47, 48. So I bought the close. 50 is disappointing, but it's not a huge issue so long as 51 is not either. Well, so if 51 looked like 50, that would be a big problem. But I did not like that 51 had a large tail on it. For me, I want to see 51 close in the upper third of bar 50. That would be ideal when you get something like this. And instead, it looks the way it does. So really not all that great. So for me, I decided I decided to hold though. I thought it was fine, and we obviously got this big sell off to the downside. And then as we bounced, I took a half an R, so I got out somewhere in here. And the thing about taking a half an R versus waiting for the full R in a situation like this is, if you take the zero point 0.5 R, you get out here. If you wait for the full R, you risk a full stop, which it missed it by a half a tick right here on the low of 65, and it hit the stop loss, or it hit the profit target to the exact tick. So it missed your stop loss by less than one tick, and it hit the profit target by at the exact high tick. And then if you handled that perfectly, you got out very slightly better than you would have had you just taken the half an hour. So that's kind of the thing that I've been working on and speaking about a little bit recently, with taking when to take the 0.5 R, because sometimes it just makes a lot more sense to just get out of the trade rather than scale in, because what you'll find is sometimes the scaling in strategy won't work out, and when it does work out, you'll end up basically with the same break even or small loss that you would have taken had you just gotten out in the first place. So that's something to think about. The only other thing I did, I sold during 56 somewhere in this area, and I made a mistake and I exited after 57. It could have been 3 legs down, but realistically, we should get below 54 for sure. I think it was just I was down very small on the day, and there was a lot of failures going on, so I kind of mentally just wanted to be done with the day. So I did sell here, and then I exited on 57 once it didn't go my way. I'm supposed to hold through this. That was a bad exit on my part, but that happens. And once I make any emotional decision during the day, I'm done for the day. So after that, I was done for the day. So like I said, I ended up with a small loss on the day. But I'm very, very okay with how I traded today. Ironically, the trade I'm the least okay with was the one I made something on. But everything else I did in here, I'm totally okay with. Just look at the SPY for today. So looks like a failed breakout attempt, or I guess it didn't even break out above, but the bulls wanted to get a breakout above the high of June 11th, and they were not able to. So we're probably going to start to go sideways here. Unless tomorrow, again, we get a big, strong follow-through bar or a big, strong breakout bar. I don't think we will, but that's what the bulls need to see. They need to see a strong close above here and follow through. And if they don't get it, not really going to be worth it. The weekly chart, 4 legs up, not really all that great. Traders are hoping that this triggers. Bears are hoping that this triggers and that they can sell below for a couple of legs sideways to down. All right, that's going to be it for this video.